Hello, everyone, and welcome back to Pigeon Peeps, the space and place where the payments nerd birds here at Pigeon flock together to talk about all things new, now, and next in the payments industry. Caw team! Happy holidays! We are back again. Who is ready for today's discussion? I know I am. I hope you are. I'm seeing some hands raised. If you're on audio, I wish you were on video. Otherwise, we want to dive right in today. I want to let the team introduce themselves, and the curveball for today's opener is introduce yourself and what is your favorite part about the holiday season. We will kick off with our SVP of Innovation and Strategy, Kevin Olson.
Hey everybody, I'm Kevin Olson. You may know me as a payments professor out there on YouTube and doing a lot of things on social media, but the reality is I am the Senior Vice President of Innovation and Strategy for Pigeon. And if you want to know my favorite thing about the holidays, it's definitely the cookies. I love the sugar cookies, and I recently discovered from a friend that there's a sugar cookie that you can take a Rolo, the piece of Rolo candy, and you put it inside the sugar cookie, and it is like the best cookie ever.
Love that. And then we'll kick it over to Tim Rosansky.
Hey folks, good morning. Tim Rosansky here, head of sales at Pigeon. I've been here since day one as one of the original co-founders. My favorite part of the holiday season is the elf on the shelf. It has to be. So every morning, my family, led by my 5-year-old and almost 2-year-old, we hunt for that little elf. Sometimes it takes 1 minute, sometimes it takes about 20 minutes, but it's a real joy. And so I got to go with the elf on the shelf.
That is so sweet. I've never had one, but that sounds really sweet. And then finally, to kick us off with introductions, our fearless leader, Abhishek Viraganta.
Hi, I'm Abhishek Viraganta, CEO of Pigeon, and I'm terrified. Favorite part of the holidays is the presents. Not for me, but for everyone else. It's fun. Find a lot of joy and really kind of figuring out what to get people every year. It allows me to test whether or not I know people.
That's super sweet. And hello, everyone. I'm your illustrious host, Dr. Angela Murphy. You may know me in other places and spaces as Payments Elsa, and I'm the Vice President of Marketing and Solutions here at Pigeon. We're excited to have a conversation with you all today about the 2025 year in review and some of our predictions for 2026. So before we get started with some of the in-depth questions that hit hard on this year's biggest topics, let's dive in. For everyone that's here today, and we'll kick off with Tim, we're going to go to you first. When you think about faster payments in 2025, what's the one word or phrase that defines the year for you?
I'm going with traction, Angela. Flirted with momentum, adoption in the moment, but I think traction. It's got to be traction. This was the year that it all really started to make sense, I think. Not for us. We've lived and breathed faster payments for a long time, but for our financial institutions. I think a lot of potential that we were noticing in prior years was recognized in 2025. So that's it. I'm going with traction.
All right, Abhishek, you next.
Mine is Kachow. I think Lightning McQueen really kind of set the stage for making rubber meet road, right? Tim's absolutely right. It's all about traction. And in follow-up, also evolution. I'm going to keep the Cars the movie references to a minimum from here forward, but I think we kind of see that faster payments aren't necessarily what we thought they were going to be in a couple of different ways, and I'm sure we'll get into that over the course of today's session, but starts with what adoption even means. What are the use cases we're seeing evolve out? What are the types of faster payments that we're talking about at the end of 2025? All exciting stuff.
All right, close us out, Professor. One
Well,
word.
to quote the great Lightning McQueen, speed. I am speed. And we saw so much speed from the network. What we really seen, and the one word that gets me is growth. The growth of the network in all areas. And it was in RTP, it was in FedNow, all areas of both networks in instant payments. The speediest payments we've got out there had a lot of growth.
And I will say that today's episode is not sponsored by the Lamp movie making people. I'm not even going to say the name because I don't want to get this removed from the internet. So if it's a Lamp movie making people, they did not sponsor us. Don't report us to the big rodent with ears, please. So to dive in, to today's hard-hitting questions, and to kick us off, I'd like to send it back to Abhishek. Why will 2025 be remembered as the turning point for real-time payments in the United States?
I think elephant in the room is Genius Act, right? That to me signals a shift in the way we're thinking about faster payments in general. The problem with the way we were looking at faster payments before is we were thinking about it in context of peer-to-peer, or we were thinking about it in context of what are the use cases that are going to best benefit my institution. And really, we think about disruption in the banking industry. We think about the impact of payments in general, and the shift has really been towards consumer impact, towards end user. I think people thought about the Apple approach, and it wasn't minimalism, it wasn't about design, it was about user first thinking. And I think the Genius Act allows us to start making that real push towards user first thinking. Stablecoin could be a real game changer in terms of the way that we think about payments as a whole. Not from what rail does this need to flow over, but really what am I trying to accomplish with this payment? And helping us achieve those goals without dirty word of the day directories hindering us as we run down that road.
And you definitely mentioned what rail it goes across. So I'd love to extend what you were talking about in terms of how did RTP and FedNow adoption evolve over the course of this year? What changed meaningfully outside of, the regulatory environment, which we're going to touch on here in a few minutes, but compared to prior years, we've been here since the early days. What's changed?
I think to quote the great Dr. Murphy, I think what we'll find is that early adopters aren't early adopters anymore. We're now in the fast follower stage of the adoption curve, even in the talking about crossing the chasm, right? What is it between market adoption at the front end of it versus where we are today? What is it that's driven that? And we'll talk more about payments volumes and the flow of payments momentarily, but that to me has been the real driver. Is we're now thinking we're not thinking about this as a necessary function of user experience at a financial institution. We're not just thinking about this as yet another piece we have to stack on top to maybe add value. It's really become necessary at the end of 2025.
Absolutely.
Well, and Angela, I'd have to say too, if we look at what really changed, we started the year off with the government saying no more checks. We then had early on in the year with the government came in out and saying Treasury and all departments, if they want, have the ability to use FedNow, especially with FEMA. And then we saw over in the RTP network that people became more comfortable, and those people being the industry itself, the financial institutions offering those services. And I got to say, my most used RTP payment this year was a request for payment, which was really surprising. It really did gain some traction and get some movement. And I think that is what really caused growth on both networks.
I definitely agree. And in terms of industries that move from pilots to real production, I think that the federal government and governmental agencies getting involved created a large uptick in terms of going from pilot to real production. Do we have any other industries that we want to highlight in terms of who's picking this up and saying, yes, we need this?
Well, yeah. We saw it with real estate. We see it with the automotive industry. We are starting to see where more and more people are going, okay, this works for being able to pay things quickly and in certain situations. Another key area being in loans, too, being able to just move that money around. A lot of people thought instant payments would be a P2P thing. And it is. It's got a place for P2P. There's no doubt about it. But the reality is it's much more in a business to business, and even business to consumer space than what was first anticipated by those that were hesitant at least to get onto the network. They are now finding that it's got major use cases.
And that's exactly it, I think, Kevin, right? We've almost run the account to account, the me-to-me transaction discussion has run its course, but it bears mentioning here, because really then the question is, why are we where we are today from a payments perspective? And if you think about the disruption that's happened, financial institutions, fintech is not something that needed to be disrupted, right? The last thing anybody wants disrupted is their access to their money. That's just being completely transparent. But the follow-up to that then becomes, okay, so then why are people diversifying where they're holding their money and those types of things? That's where we start to talk about, now we're holding our money in a million different places. Robinhood, Venmo. I'm holding money in my Coinbase account. I mean, the list goes on and on and on. And then you come to a point where account to account is really just end users thinking about money where they need it, not money across all of these various holding instruments, right? That's kind of where we have to bridge the gap now with faster payments. Is it's making that experience seamless from A to A, me to me perspective because of the impact of the 2010s diversification.
And I think that that ties very closely to financial institutions and their role in this ecosystem. So, Tim, I'm really interested to hear from your perspective. How did community banks, credit unions, banks, financial institutions overall progress this year? From your perspective, are we seeing the gap closing? Are scale advantages widening? What's your perspective here?
Certainly. Yeah, it's interesting. I think in this past year, we saw several examples where community financial institutions were able to put themselves in a position to punch far outside of their weight class, right? I think there's some very thoughtful, sophisticated offerings that our community FIs were able to roll out in 2025 that seemed impossible just a few years ago. What I would say is that we saw firsthand that some pretty amazing things can happen when an FI commits to a strategy, but then leverages the right internal and external resources to make it happen. Just to add a little meat to this, I'd say banking as a service happening at the community FI level was a great example where we saw some smaller FIs just looking and feeling much like those that are 10 times or even 20 times their asset size.
Can you dig a little bit deeper on that? Because I think that that's really exciting, particularly for our community financial institution friends that are listening to us today. Where did faster payments, from your perspective, deliver the most visible end user impact this year?
Yeah, it's a great question, Angela. I would lead with government payments. I think the U.S. Department of Treasury being involved for a meaningful period of time now is big. But then we all saw the announcement that FEMA payments were happening over FedNow back in the fall of 2025. It's just the beginning, as we say it. As we see it. And then I think also, just this isn't new for 2025, but we definitely saw more activity in the past 12 months around FIs delivering on their commitment to their end users for an improved end user experience. So I think specific examples that come to mind might be the offboarding of brokerage accounts, where historically this was a clunky, borderline sloppy workflow for end users. Today, offboarding experience can be almost effortless with very limited disruptions to the end user. So I think it's hard to argue that this isn't a huge step in the right direction with more to come in 2026.
So, with that in mind, what are you thinking? Where's the balance tilting here? Is it more B2B this year? Is it more B2C? What do you think?
Yeah, I'd say we saw more B2C in 2025 and onward, right? The user behavior was trending toward retaining business and just not quite yet the cash flow management upside that I think we will see in 2026. I think customer expectations around instant funds disbursement were realized throughout 2025. I think it's hard to argue. And I think this was made possible by the adoption of FedNow and RTP.
Yeah, the end user expectations have shifted dramatically. And I think we've kind of moved away from the idea overall that instant payments are somehow innovative in a way. It's just now becoming an expectation from an FI, from an end user, from an account holder like me, or like those of us on the call, or those of us who are listening today. So we're going to shift gears a little bit and want to talk about the favorite word of the day, maybe not. We'll see when we get to the end of today's discussion. Interoperability. At least I'm not using the U word, right? So we're going to touch briefly on this because we have some other really meaty topics that I really would like to dive into here with the team. But Kevin, can you just talk a little bit about what happened with interoperability this year? Did reality fall short of expectations? Did we exceed expectations? Are we somewhere in the middle? What are financial institutions and fintechs doing to solve for these problems?
Well, let me go ahead and start with this. When it comes to me, the clearinghouse, and the Federal Reserve banks, none of us can spell interoperability. Never have been able to, okay? That is just a fact. The reality is interoperability is not a requirement between RTP and FedNow. If we really look at all of our payment channels and systems that are out there, the clearinghouse offers their own ACH solution, the Fed offers their own. The clearinghouse offers their own wire solution, the Fed offers their own, not interoperable. The ACH one, it does. I will concede that one. They both offer check clearing services as well. They don't have to have interoperability for there to be success. But the industry has found ways to be successful using somebody like Pigeon, of course, where we offer that capability of being able to route your transactions, and when there isn't that interoperability, to provide solutions to be able to fill the gap. So there's no need for the Fed to go figure it out or for the clearinghouse to go figure it out, because there's people like us that have already figured it out for you.
Absolutely.
Angela, just to kind of add to that, food for thought is I don't imagine either group has incentive to ever become interoperable. So I think it would behoove us all to move as an industry away from maybe pipe dreams of interoperability of the two networks. And to Kevin's point, maybe leaning on providers that we are not necessarily biased towards that can do both.
Well, and this is a little bit of an idea that I just had now that Abhishek, you said the idea of pipe dreams. When you think about piping and the reference to infrastructure, and you look at infrastructure, whether it's piping or it's cell towers or things like that, I do think that in terms of the idea of interoperability, there are a lot of things that people and users in today's environment utilize that they don't care what their phone call is bouncing off of, as long as the phone call goes through to my mom to say, Merry Christmas, I'm going to be there in 3 hours. People don't really care which pipe in your house the water goes through, as long as it comes out of the faucet that you're trying to get water out of. And I'm sure we're going to touch a little bit on this in today's discussion, but maybe that's where we're moving, is it doesn't matter how it gets there, as long as it gets there the way that we need it to get there. The background doesn't matter. So I think what's going to be the bigger topic today in terms of the discussion around instant payments and what changed this year is around the R word, risk, the other R word, rules, the third R word, readiness. How do we deal with these things? And what changed this year? We've already referenced the Genius Act as a huge milestone in terms of the regulatory environment. But Kevin, I would love for you to lead off this portion of this discussion. Where were the most important regulatory changes affecting payments this year in 2025?
So there's the four areas. There's risk, there's rules, there's regulations, and there's recommendations. And well, I guess you can almost say too, there's executive orders we got to deal with nowadays. And you know, a couple things that get me right away is both RTP and FedNow did a $10 million increase. That's a single transaction that they said we can make a single transaction up to $10 million now. That's a huge deal. That opened up new categories of payment types that could be sent with instant payments across those networks. So I think that was massive in itself. I also, of course, can't ignore the Genius Act. The Genius Act and it getting passed, going through Congress, going through Senate, getting signed into a law. I'm trying to remember, at least, actually it's never happened in my lifetime, to where a law was passed to create a brand new payment channel. So that's massive to be able to see things like that. One, too, that I think, you know, people may not be paying enough attention to is the rules for ACH, and that's a rule. The rules for ACH are requiring in 2026, they go into effect, but this year you start working towards having more fraud monitoring systems on sending and on the newest thing, the receiving side. This is something that I hope people see the big picture of, is it's going to impact more than ACH. Yes, it's an ACH rule, but it's one of those that regulators and the industry are going to be able to say, well, if you're doing it here, why aren't you applying it to those instant payments that are coming in too? So I believe that that one is, it's had an impact. It maybe hasn't been realized yet, but we'll see a lot of that in 2026.
And I do think that that's shown a different level of maturity in fraud and risk management conversations this year. When we have been speaking with clients, partners, other industry leaders, I think we have shifted, and maybe you all can correct me, but from my perspective, we've gone from the talk track of faster payments equals faster fraud to a more mature discussion around fraud and risk frameworks in an instant environment. And I think that can be really powerful, particularly, as you said, Kevin, with the new ACH rules. We're getting some of this guidance, some rules, some frames from which we can reference what best practices would be as financial institutions and third-party service providers.
Well, we can add too, both the clearinghouse and the Fed provided tools for being able to monitor and manage risk within their networks. Free tools, not something that they were forced to do, not something they're charging extra on the networks to do, but tools that are available, more tools that are even coming. Like, that has been their focus. And if you look at the data, I can't say neither networks had no fraud. Wherever there's payments, there will be some fraud. That's a fact. But the amount of fraud that they've had is minuscule. I mean, it's very minor, the amount of fraud that they've had. And yet they're still proactively working on and providing tools and looking for more things that can come in the future to stay ahead of it from ever becoming a problem.
And I will say this to anybody who is listening today, whether or not you're working with a third-party service provider, etc., be aware that you don't have to pay for these things. Just like Kevin said, there are tools available, there are voices that will guide you to the right place and space to find those tools. There are representatives from both of those institutions or third-party service providers that have trusted voices that will provide all of the material that you need to be strong in this space in terms of fraud, risk, etc. Not legal advice, not a law, not a rule, not suggestion or regestion. I can't remember what you said.
Recommendulations.
Recommendulations. See, this is where the PhD falls apart, is when we start making up words. But there are these things that are available to financial services professionals that are for free. Do not let people charge you for knowledge and tools that are readily available for your institution. This is where you make a huge difference. And with that, I want to dive into the question around what we might have underestimated this year as an industry. So, Kevin, I'm going to ask you to lead this off, but I would love Tim or Abhishek if you'd like to jump in as well. What did financial institutions or even the industry underestimate about operating real-time payments at scale this year? Was there anything?
Well, if there's anything that was underestimated, it's one of the key things we've been saying from the beginning. It's one of those turn it on and watch what happens type situations. And I think they underestimated the amount of payments they would receive for those who just only went to receiving. I also kept hearing, a lot last year and the year before, well, there's not that many people sending on the network, so why would I want to join it even just to receive? Let me first say this, U.S. Treasury is the largest sender of any type of payment there is. Every payment channel, okay, U.S. Treasury, largest sender, period, and they're on the network. Number two, the number of senders on at least the FedNow network, I don't know for sure on the RTP network, I don't have that data, but I do have data to show that over 300 unique businesses started sending. However, on the FedNow network, the number of senders doubled. And I think people underestimated what the growth would really look like. I think that people also underestimated the finding of the different use cases. We have always been a very creative industry. And once we're giving a tool something we can work with, we want to maximize that tool, and we have. We've seen it in the digital wallet funding, which is going to be huge when you get to stable coins. We've seen it in the loan disbursements, payroll, earned wage access. Corporate account sweeps was another area that suddenly, hey, wait, this is a very effective tool. And one that I think is big too that gets overlooked is insurance payouts. We've got FEMA on one side when there's been a disaster, but you also got an insurance payment that is going to happen in maybe, not the larger scale disasters, but in the personal disasters.
Yeah, I mean, I think a lot of people, if you've listened to anything that I've said this year in terms of insurance payouts and disaster payouts and what that looks like, I have direct personal experience with insurance payouts and what that looks like when it's ugly. So for those of you who are listening today and are not sure what this might mean for your end users. When Kevin says that the Department of Treasury is like one of the biggest senders of payments, that is true. And when they're sending disaster relief payments, when they're sending these other types of payments, it does matter. When you're talking about people who experience some type of natural disaster in their immediate sphere, it does impact them directly. So the story that I regularly tell, and I'll probably be saying this until I die, is that I am a survivor of a natural disaster. I survived a tornado when I was 17 years old. My family lost everything. And my father had to drive a borrowed vehicle from a friend in our church to the bank basically multiple times a week to see if the insurance check had come through so that we could purchase the things that we need. There wasn't a way for them to mail us the check. Like, the check is in the mail, and we all like to joke about that, but if the check is in the mail and you don't have a mailbox, where does it go? And so when you think about depending on where you live in the United States, we have people in the West that deal with wildfires and flooding. We have people in the rural South that also deal with flooding in the Mississippi Delta or with hurricanes in the Southeast. Like, we've all seen the impact that this can have, but we don't necessarily see, when we see the news clips of, okay, well, I need to go buy shoes and clothes for my kids to go back to school, and where's the money type of a thing. So if you're an institution that maybe in one of these areas, or maybe is not sure if Receive First is right for you, just in terms of this particular use case, disaster relief specifically, being able to receive those funds and being able to provide those directly to your account holders is something that I think is really important. And then I'm going to go ahead and like step off my soapbox and kick it over there to that side of my office today. But I just wanted to point that out in terms of what's possible. And I guess that kind of dovetails into the use cases that define the year, which is, one is FEMA, disaster relief. But Abhishek, what else did you see? Which faster payments use cases defined the year? What has staying power?
So I'm gonna call it now. Wire is dead 2027. That to me was the biggest takeaway for use case of evolution.
Oops. Well, we're going to change that question. Tim, it's coming to you. Okay? You ready? We're going to start that over and we're going to kick it to you, all right? So I think that dovetails nicely into the whole use case conversation. So, Tim, what were the biggest faster payments use cases? What defined 2025? What were the use cases that had proven staying power?
Certainly, Angela. I think when we take a look at the earned wage access examples, it's something that I think we talked about in every one of these style of discussions, but it's because they surface in every example. There's been cases where we'd set an institution live on a Friday, and then by Monday morning, the institution's receiving payments without notifying their customer base, without making any changes to their customer experience. Payments just start coming in from a lot of those earned wage access examples. So I think it just is hard to argue that wasn't a huge impact in 2025.
Kevin, what else did you see?
I really, like I said, I saw the growth of the RTP network through the RFPs and being able to use that. And a lot of that was personal experience. And when I shared that with people, I started hearing from them, yeah, I can do that too. I can tell you, I'm not a big gambler, so this might sound weird, but I had to go test it out because I knew it was possible. Trying the gambling websites, it's legal where I live, just so you know too, and trying the gambling websites to be able to see what it was like to be able to do those instant types of deposits, or those even, okay, I didn't get instant payouts, but I know somebody who did because they made better bets than me, obviously. But that was, I think, massive in getting things to grow because we already knew the payroll aspect was huge. I thought it was too surprising, like I said, to see the corporate sweeps, that people could instantly be able to move things around when they wanted and how they wanted. I know hurdles wise, we still got some, businesses to be able to adopt for weekends, but we're seeing the adoption. We're seeing people become more willing and looking for new ways, expanding of the business hours. And in every case, it's successful. I haven't heard anybody say, I tried instant payments and I instantly didn't like it.
That's actually a really good example. I think actually what I'd like to do is shift gears a little bit to look at innovation trends for this year. And Tim, we're going to lead off with you here. What innovation trends quietly reshaped the faster payments experience without a lot of hype this year?
Sure. And Angela, I'm going to preface this by saying this is rather old cliche style response, but I just think it is the truth. We saw things like Cash App and Venmo and Zelle draw attention to the idea that legacy payments rails are slow and maybe not in alignment with what folks are expecting in 2025. I think there's also been quite a bit of momentum and interest forming around programmability and digital asset transactions as of late. It's an interesting path. What we've always said at Pigeon is that we're designed for FedNow, RTP, on-us transactions, but then also whatever might come next. I think we're making good on that in a hurry. So I think there's a lot more hype to come on this rather stable topic in 2026.
Kevin, what about you? What innovation trends are shaping the industry that maybe not everybody is talking about in the most meaningful way just yet?
Well, I think one of the biggest things is it just works. The exception item processing is part of how the networks themselves work, so you're not having to do a lot there. I think the other thing is it just works in the sense, too, that it can be seamlessly integrated into products and services. And in that seamless integration, it makes it so much easier to adopt and use these payments because you don't know that you're actually adopting and using those payments as an end user. And as an end user, there's very few of us that can walk in and go, I want this sent via ACH, because we don't know what that means. Or even, to be able to decide, I want it RTP or I want it FedNow because I have a preference over one over the other. That doesn't really happen. All we want is that, and I think you mentioned it earlier, the security of knowing that this payment has gone through and the fastest access I can get to having my funds, or the knowledge of knowing that it was received by somebody, especially here in the holiday season. If I forgot somebody, for Christmas, I want to be able to get something there as fast as possible to limit that time of where I feel awkward. Okay, we all know I feel awkward all the time. Anyway, I want to be able to fill that in. And I think that was something that is huge that we did see this year, that people didn't realize. You don't always see what's happening, but it's still there and it's still happening. So a lot of seamless integration made for a big difference and made for more use case adoption.
Absolutely. And Abhishek, I'm going to shift this over to you. In terms of, we're talking about product, user experience, the innovation lessons that we've derived from this year. So what did you see in terms of product and UX improvements that improved trust and adoption this year? Like, what expectations were shifting? What happened?
I think we did a good job moving away from discussing Rails. I think that really on its own massively improved user experience. Tim alluded to this early on. We need to keep having the discussion we're having about faster payments in context of what people want to achieve with the payments that they want to make, right? Payments are one of the most important parts of our lives. We do it in every form and fashion. It's funny, when we work in the space we work in, to go from where we are to then have, as an example, Pigeon's banker asked me, are you interested in signing up for our real-time payment services? And then all of a sudden, that's you're starting to see the use cases evolve in real time. The kinds of things that user experience means in 2025 for instant payments is really just, are you moving money at the rate at which you're expected to move money? And if the answer is no, then the question is, then how are you planning to do it in 2026? And that to me has really been the key shift as we push forward here.
That is epic. I need to soundbite like 17 of the things that you've said today, Abhishek. Remind me to do that in post. So we're going to kind of come to the conclusion of today's discussion, and we're going to do a lightning round in 2 phases. So the first phase is going to be just our general lightning round, and then the second one is going to be bold. So think bold in the back of your minds. So, lightning round, we will start with Abhishek. What's one assumption about the faster payments industry in 2025 that proved wrong?
I think the immediate assumption that comes to mind is the fact that it is extra, right? We talk about it being one more payments channel to manage. We talk about it being one more fraud channel to manage. Instead, we're now really focused on streamlining everything, streamlining it into your day-to-day, streamlining it into your day-to-day operations workflows. That to me is the biggest assumption. We talked a lot of big talk and run up to this year about how that's possible. To see people actually have that in action was a great to me told you so moment when we saw operations staffs really embracing this stuff.
Tim, coming to you next.
Yeah, that's where my mind went as well, to be honest with you. But I'll share. I think we were eager, optimistic, and hopeful that almost all FIs would be connected to faster rails within the first couple of years of the FedNow launch. I think we're definitely headed in the right direction and then some. I think that's hard to argue, but there's still a lot of opportunity here, a lot of potential to be realized with regard to adoption.
Kevin?
I think it would have to be the nobody will use it if we don't need it type mentality. The proof was for 487%. What's that? That is the percentage of growth in transaction volume and daily average volume just for the RTP network. 31%. What's that? That's the transaction volume and the daily average volume for the RTP network. And I mean, they average over 1 million transactions per day. That's huge. Their value is, 405 billion for the year. That's you. I don't know about you, but I don't mind being a percentage of that. I mean, whatever financial institution I am out there. So I think, again, the numbers don't lie. The data doesn't lie.
I tend to agree. I think that the assumption about faster payments early on this year is like, well, nobody's sending, so the networks aren't going to grow. And then by the time we got to September 30th of this year, we had in transaction value across both the RTP network and the FedNow service was combined north of $1 trillion, and I mean capital T trillion dollars. That's $1 trillion pie. And we've been talking about this here at Pigeon among our peers for years, that there is a multi-trillion-dollar market value that is accessible by all shapes and sizes of institutions. And earlier this year, people were still saying, oh no, there's no senders. There's going to be no volume. Nobody's going to use it. Okay, so where's your $1 trillion?
Well, Angela, you know what I want to add to that I don't think people are hearing. If you hear nobody's sending, what you should really hear is you have the opportunity to be an early adopter of sending and be able to really corner the market in what's out there and what's available. And we've seen others that are doing exactly that. It's being very profitable and beneficial to them.
And
So
Kevin,
I feel like that's your one lesson. Oh, sorry. Go ahead, Abhishek.
no, so Kevin, to add to that, what I think really that discussion has looked like is no one's live on these networks. What is the point of going live? No one's sending on these networks. What's the point of sending? Soon it's going to be no one is. I remember when people were complaining about RFP being inaccessible. I was among them, but we've turned that around also. Where I think if you look at other payments rails or if you look at other journeys of technology adoption, you slowly start to see an evolution of this hasn't happened yet, but it will with faster payments, with RTP, with FedNow. We're breaking those barriers almost faster than any other technology improvement, right?
Absolutely. So when I mentioned the word bold earlier, the thing that we're going to use to close out today's discussion is just like we did last year. I'd like you to make one bold prediction about payments, faster payments in 2026. What's your bold prediction? Abhishek, I'm going to start with you.
That's not fair, Angela. I was going to plagiarize. So my bold prediction for end of 2025, heading into 2026, is that stablecoin is really going to make us rethink the way we talk about financial institutions as a whole. Not just from a custody perspective, not just from a transactional perspective, but again, in context of user experience, it is going to reshape the way people interact with their financial institutions. We talk about financial institutions and we talk about their impact to the greater ecosystem. It was initially about how many different systems can I layer on top of my processing layer to give my customers, to give my account holders the best experience that they're looking for. Now, the question is how raw can I make the experience? How can I distill that down to just a couple of systems to make this experience as seamless as possible? Because integration layers, integration checkpoints are going to start to become cumbersome from an overall workflow, and stablecoin is going to be the driver of that.
That's great. Who wants to go next? Bold prediction.
Go ahead, Tim.
It's hard not to plagiarize when that's where my mind goes as well, honestly, right? You take a look at the landscape and with the Genius Act and everything that's being telegraphed as we move ahead, the impact of all things stablecoin in 2026 and onward is I think going to be a top focus. I think also all things, generally speaking, broadly, where we sit in 2025, 2026, are just moving so quickly. By the time you get your arms around a concept, it's old news, right? It's past. I think we're seeing an acceleration of that as we move ahead. So that's where my money is. It has to be is a pretty rapid drive toward a general comfort level with stablecoin among financial institutions in the U.S.
I'm going to call mine the stablecoin mandate of 2026. And this is how I look at it. I think, first of all, it would not surprise me to see the White House mandate stablecoin usage. Not at all, that all financial institutions have to offer it. Secondly, even if they don't, there is a mandate out there for you right now that should be self-imposed, because if you're looking at what is happening in the industry as far as Visa, MasterCard, what they're doing in the stablecoin sector, if you're looking at the value of the transactions that are already flowing, and the Genius Act isn't even live yet. If you look at the number of transactions that are flowing every day already that are out there, it is convincing data that you must get a solution. And I'm going to add something to that. If you're going to have a successful stablecoin solution, you had better have an RTP and FedNow solution to be able to back it up or to run and complement it. Because if you dive deeper, we don't have enough time to unpack this here, but if we dive deeper into exactly how a stablecoin works and exactly how a FedNow RTP transaction works, there's no doubt there will be times that you need one or the other, and that you'll prefer the RTP or FedNow just for liquidity purposes and access to those funds as a financial institution. So there's a lot happening. There's a lot to be learned from this, but I call 2026 the stablecoin mandate year.
12:56 on December 23rd.
You heard it here first, everybody. We're making these bold predictions. And for my part, I am going to say that my bold prediction for 2026 is the rapid adoption of artificial intelligence in financial services, as is suggestulated or recommendulated from either the White House or other regulatory bodies. If you are an institution that has your leadership saying, we're never going to touch it, no, please ask them to revisit that opinion, because 2026 is, in my opinion, not only going to be the year of stablecoin, but the year of artificial intelligence in financial services.
We didn't even talk about agentic AI payments yet.
I know. We have so many topics that we love to cover as a team here at Pigeon. We have some of the best minds in the industry that are a part of this team. I hope that you all enjoyed listening to us today. And if you have questions about anything that we said, terminology, applications, integration questions, or how Pigeon can help you and your financial institution, follow us in all of our projects. We are at www.pigeon.net. You can follow us on LinkedIn. You can download our white papers and thought leadership, subscribe to our newsletter, follow the payments professor on all of his online projects, and or follow me, Payments Elsa, on all of my projects to learn about all things faster payments, stablecoin, artificial intelligence, fintech, payments, and most importantly, happy holidays, everybody, and we will see you in 2026.